I want to wish a warm welcome to all of the participants today. And I really want to thank Abby Paul and Brad Umble from Ulster Savings Bank for hosting today's workshop. We could not do it without you. Also want to acknowledge members of our team, Melissa Clark and Yadira Sims for putting this together, and a shout out to Emily Darrow for assisting as well. But please don't be shy. Feel free to ask questions, use the chat box and everything. And, you can chat away while we're doing the presentation. I'm not sure if Abby and Brad will go over it when they're going to take the questions and stuff, but put them in there for sure. And, enjoy the day, and hopefully you get a lot out of this. But welcome.
Good morning, everybody. My name is Yadira Sims. I get to read the bios of Abby and Brad, so we can get to know our speakers a little bit better. First up, Abby Paul. Abby Paul joined Ulster Savings Bank 4 years ago. With over a decade of experience in banking, she is responsible for leading the bank business development across branches located through Dutchess, Orange, and Ulster Counties. She understands the economic challenge Hudson Valley residents face. Abby actively supports Ulster Savings' mission to remain a community-focused institution through her volunteer work. Abby earned a bachelor's degree in business administration from SUNY Brockport and is now enrolled in a Master's of Business Administration program at SUNY New Paltz. A 2014 Graduate of Leadership Dutchess program, Abby also completed the Pattern of Progress Fellowship program. A 2014 Top 40 Under 40 honoree, Abby is an advocate for her community. Abby believes household financial wellness is a key ingredient in any healthy community. And next, Brad Umble. Brad has been part of Ulster Savings Bank team since the summer of 2017. He has worked out of the Newburgh branch since early 2018, most recently as branch supervisor. He enjoys being able to support his neighbors and local businesses through a community-oriented bank like Ulster Savings. Brad earned a bachelor's degree in psychology and music from Hobart College, and later complete a Master of Art degree in art management at the University of Buffalo. And I'd like to give a shout out to Melissa Clark. She will be monitoring the chat box. So please feel free to ask your questions as well as concerns. I know the presentation is broken down to 3 segments. Each segment, we're going to give our speakers about 30 seconds to recover, because I know speaking for an hour, it takes a lot. As well as address questions from prior segments. With that, I turn it over to Brad and Abby.
Good morning, everybody. I'm Abby, as you probably gathered, and I'm pointing to Brad on my screen, like you can see where I'm pointing. So thank you all for joining today. I'm really excited to be here, and I know Brad is as well. I think it's really important, especially in times of uncertainty, to just kind of take a moment and assess your own personal situation with regard to finances. And hopefully you find this presentation helpful, fun, and what we'll do, like Yadira said, is as we kind of go through each of the segments, we'll take questions. So if you have questions you want to put in the chat box or anything like that, and then at the end we'll have a general Q&A, time permitting, for anything that may come up that you may think of later. So just a little bit of background. Ulster Savings Bank was founded in Ulster County, as you can imagine, in 1851, and we have 14 branches throughout Ulster, Dutchess, and Orange counties, and we hold about just over $1 billion in assets. As was previously mentioned, we're a community bank, which means that we pride ourselves on supporting small businesses and our community individuals. So when you bank with us, you're essentially reinvesting into our community. Just a few little disclaimers. We are not certified financial planners, so just take the information that we are providing in the spirit in which it's given. And if you have any specific questions to your situation, I would suggest you reach out to your banker or your financial advisor, or feel free to give us a call and we could talk offline. So the goal for today is to, really give you some timely, helpful tips. We're going to break it down into 3 parts. So the first part will be the 10 rules of personal finance. The second part will be money conversations and how to become comfortable with talking with partners, family members about money. And then the third part will be COVID-19 related banking, because we are kind of in a new frontier, and I can't speak for anybody but myself, but I've never lived through a pandemic before. So I'm going to share my screen and get this PowerPoint presentation up. All right, it's just taking a second longer than I thought it would. All right. So I think the first and most important rule is to accept 100% responsibility for your financial decisions. So regardless of whether there's a pandemic going on or anything, this is a really important first step, because a lot of times we can feel too bogged down by our surroundings and say, oh, I have bad luck or things like that. But ultimately, if you're over 18 and an adult, anytime you make a financial decision, you are the owner of that decision. So I think if you first acknowledge that you are in control of your household finances and you accept that responsibility, that's a really great first step. And this can be done regardless of what stage you are in your life, where you are financially in your life. So if you commit from this moment on to accepting 100% responsibility for your financial decisions, that's a great first step. I think with everything that goes on in the media, social media, just that feeling of keeping up with the Joneses, focus on your household. So comparing yourself to others is really a recipe for disaster. So, for example, if I log on to Facebook and I have, let's say, 600 friends, at any given moment, I'm going to have 2 Facebook friends on vacation. I mean, maybe not during a pandemic, but you know what I mean. I'm going to have 2 friends that are expecting children, one buying a home, one selling a home, one buying a new car. And if I allow myself to look at that and say, oh, I should have a brand new car, I should be buying a house, why am I not on vacation? Then, I could make some really unhealthy spending decisions that don't make financial sense for my household. So thankfully, life is not a contest. And I've decided to focus on what's right for me and my household. And that's something that you can do as well. So rule number three is late payments are very dangerous. So again, like I previously mentioned, we are just speaking in very general terms, but from a standpoint of, let's say, you run out of money before the month is over. We've all been there. Be very cautious about which bills you do not pay on time. So some bills have more extreme consequences for not paying them on time. So for example, your car insurance, your health insurance, if those lapse, then you could have insurability issues at a later time. Or if, God forbid, something does happen and you are, needing to use that insurance and you don't have it, that could be a very big problem. So keep that in mind. And of course, with car insurance, other insurance type things, there are different risk ratings. So if you have a spotty payment history, that can actually negatively impact your risk rating. Now, rule number 4 may sound like an oxymoron. Plan for the unexpected. Doesn't make any sense, but of course it does. So things wear out. So how old is your refrigerator? If your appliances are over 10 years old in your home, maybe your car is getting on in years and the mileage is racking up. Those are things that you want to set funds aside for, and always have an emergency fund. And if you find yourself living paycheck to paycheck, you can really just start small, planning for the unexpected, even if it's $10 a paycheck. Or something that really works well for me is I split my direct deposit. So the majority of my paycheck goes into my checking account, and then a small portion that I increase incrementally goes into a savings account. So it's out of sight, out of mind. And then, God forbid, if something does happen, I have, some funds accessible to me just by going to the bank. So I think that's a really, easy way to do it. And if your budget allows for a little bit more to be put into this emergency fund, I think, you should absolutely do that as well. Rule number 5, read the fine print. Now, this applies more to just your household finances. It's important whenever you're signing any type of documents or accessing any type of sale, any type of purchase. You see a lot of the flashing, blinking lights or advertisements on TV where it says no money down, buy now, pay later. And then there's a bunch of print that, you need a magnifying glass to read. So it's very important to understand what you're signing. It's very important to understand the consequences and the long-term effect of something. So if it's, no money down today, is it an exorbitant amount of interest that will be paid throughout the time period? And, that I can't stress enough because it's really important. So as an adult, when you sign something, it's typically binding, and you want to make sure that you fully understand the fine print, whether you're acknowledging something, making a purchase, signing your child up for camp, anything like that. Rule number 6, debit cards. So there is a little bit of a controversy among some people with debit cards. Debit cards are a modern convenience. If we took an informal poll of the participants on the call, I would probably guess that maybe 2/3 of the attendees do have debit cards, or even more than one debit card. As our society continues to write fewer checks, we really need to be aware of our debit cards' uses and limitations. They are absolutely convenient. We have different tools at our disposal. For example, with Ulster Savings Bank, we belong to the All-Point network of ATMs. So even though we're in 3 counties, we have a partnership with ATMs around the globe for over 55,000 ATMs free of charge use. So it's really good to know that you can access your money without a fee, which is definitely very handy if you're traveling or out of the area. But certain services that you may purchase, for example, a rental car, hotel accommodations, typically various travel purchases, you want to be really careful because some places do have restrictions on allowing purchases with debit cards for flights, for rental cars, things of that nature. So you want to make sure that you go in prepared, which is kind of, rule number 5, read the fine print, right? So a lot of these rules do kind of intertwine with each other. And I think it's important to have a good basic knowledge of each of them. One more point I do want to just mention with the debit cards is you have the instantaneous access to your funds, which is really great, but it also has a downside, and I don't know if any of you have ever experienced this, but if you check your bank balance online or you call in and check your balance, that balance is not static. So if you have a purchase at a previous store or a previous day that's still pending, it may not be deducted from your balance, your available balance. So you want to keep a good record. I have clients all the time who say, well, I don't keep a checkbook register because I don't write checks. Well, you know, whether you want to call it a checkbook register, a ledger, a debit card register, you know, keep close monitoring on things that you are paying out, especially if you have a recurring bill that's coming out. For whatever reason, I have this weird blind spot. And every month when my internet bill gets deducted from my checking account, it surprises me. It happens every month. It's happened every month for the last 8 years, but somehow I always am surprised when that money is deducted. And since, you know, that payment keeps creeping up in price, you know, if I'm a little bit tighter with my funds, I have to make sure that I account for that fluctuation in dollar amount. So hopefully you can learn from my blind spots and I can learn from you. All right, number 7, know your credit score. Now, my experience as a younger person, credit score seems like this weird abstract thing that I know exists. I know it's important to have a good one, but what makes a good credit score and what types of behaviors contribute to the change in your credit score? And knowing those things is super important. So I don't like to call it a credit score. I like to call it a credit reputation because I think that gives people a really good visual of, or maybe more abstract visual of what a credit score is. So think of it as a number on a sliding scale. And if you pay your bills on time, you make good financial decisions, it goes up on the scale. And then if you pay something late or do something that maybe isn't in the best interest of your finances, it's going to go down. Now, it's called a credit score. Checking accounts, debit cards, you know, how much money you have in your savings account, whether that's good or bad, they do not impact your credit score. And you are entitled to a free credit report every year. It's annualcreditreport.com. There's 3 different credit bureaus, and sometimes the different bureaus get different reported information reported to them. So it's important to monitor your credit rating and report periodically. There can be errors.
This is the worst.
Sorry. Do we have a question?
I'm just gonna mute everybody that's not speaking.
Okay, thank you.
I'm honestly over this right now.
Sorry, I feel that way. Whoops. All right, so getting back to the credit score. So errors do happen, and it's important to acknowledge that errors can happen. So, you know, if you had something on your credit report, it's a little bit more difficult to get it removed, but there are ways to contact the bureaus to make those adjustments. And I think this kind of goes back to rule number 1, which was take full responsibility of your financial decisions. So taking into account how the decisions that you make financially affect your credit rating is very important. Just like your own personal reputation, it can take a lot of time to build, and it can only take a few, you know, poor decisions to, you know, negatively impact it. So keep that in mind. The stronger your credit rating, 850 is perfect. I don't think I've ever actually met someone with an exact 850, but you know, you can strive for that high number. They are going to have the cheapest access to capital when borrowing money. And that's, you know, that would make you pay less over the life of a loan, whether it's for a car or home. So that's important. All right, so number 8, I'm only going to touch on this briefly because Brad is going to give us some really great tips on how to talk about money and become more comfortable talking about money. But if you are like a lot of people growing up, talking about money was kind of taboo. And talking about financial matters, good or bad, was seen as impolite. So I think a lot of people have shied away from talking about money with their families, spouses, parents, etc. So Brad's going to give us some great tips about how we can, have those great financial discussions with our children and our spouses. So I will leave those details to Brad. Number 9 is each goal should have its own account. Now, this is something that you can consider like a modern envelope system. So, prior to using the internet and digital currency, a lot of people would, cash their paycheck and they would have an envelope that their, rent or mortgage would go into, grocery money would go into, things like that. So if you have different financial goals, you should have a different account that's tied to each goal. So you could have an emergency fund, a vacation fund. If you are, really planning long-term and you want to have an account for your final expenses, that's something that I've encountered with a couple clients as well. So you have a CD and you, are able to do that as well. So those are different things that you have the ability to, tie to different accounts. And with modern technology, a lot of places when you log into your online banking, you can note the title informally of the account. So if you have your vacation account, you have your emergency household expenses account, maybe you have a fun account, different things like that. If you're giving a child an allowance, other things of that nature. And our final rule, which I think is something that kind of ties back into rule number 1 of taking responsibility of your financial decisions. Being good with money takes effort and discipline. And I think it's also important to note that being good with your money means different things to different people. So we all view money a little bit differently. And we all know people in our lives who are spenders, some are savers, or we have that one relative who refuses to spend, more than $5 on a pair of sunglasses, which is me. I'd rather, spend money on a handbag if I'm talking about accessories. So regardless of how much you spend and how much you save, you can truly take control of your household expenses with the help of a few experts. You can even exceed your goals. So it's really important to put a plan into place. So right now we're just going to open it up to questions for the 10 rules of finance, and then I'm going to turn it over to Brad.
Can I add something about credit score quickly?
Absolutely.
It's because you have the 3 different credit agencies that you can get reports from, you don't have to do it always once a year unless you're, if you prefer that, that's fine. But you can also get one every 4 months if you're looking to keep track of it,
To stagger them. Yeah, that's absolutely a great suggestion,
Yeah.
Brad. Thank you.
Sure.
And this is Melissa. We have a couple of questions from the chat box. If now is a good time, is it better to get a regular bank credit card or something like Capital One? And there's also lots of discussion about the envelope old school system as well. So I don't know if either of you would like to address those. Thank you.
Awesome. So I think, a credit card, it really depends on your own needs. Even though I am technically a millennial and I appreciate the modern conveniences of technology, I think regardless of where you choose to have your credit card, it's really important to have, good knowledge of the fine print, as we previously mentioned. And I think it's also, a nice idea to kind of bundle things. So if your current bank does offer credit cards, and if it's a smaller bank or financial institution, it may be through a big bank like Capital One, just like a store credit card, like, my Old Navy card is through, I think, Synchrony Bank. So I think I think it matters less on where you get the credit card issued from. And I think it's more about that credit card meeting your needs, because there's a lot of credit cards out there that are from banks that aren't necessarily physically in the Hudson Valley, but they do offer really amazing benefits. So I think it really, depends on what your needs are.
I also think it's really important to pay off the credit card in full every month. That way you can avoid any of that, exorbitant interest that they charge on credit cards. Of course, they are useful in the case of an emergency, but you just want to be careful with, racking up the balances also on the credit cards.
And I see that the envelope system is rather popular, and I think that's awesome. And whether you have a physical envelope system, if you have a virtual envelope system, there are a lot of third-party apps and tools that you can utilize to help manage your funds. It's really up to you. And I do just want to make a note that all the participants of today's presentation will be emailed the slides. So if there are things that are of special interest to you, or if you have additional questions, we'll provide you with our contact information as well. So I just wanted to address Monica's statement about spending so much eating out. I'll tell you, I know a lot of people have been negatively impacted by the pandemic financially, and there's so much uncertainty going on, and we'll talk about that shortly. But sometimes in times of crisis, it gives us pause to reevaluate our financial situations. So maybe if you acknowledge that you have, or you've realized that you have been spending an exorbitant amount of money on takeout, or golf, or whatever your finances have you spending, then you can you can kind of reevaluate that situation, and maybe spending money on $6 Starbucks lattes 5 days a week, you could put that money, I'm not saying go from 5 lattes a week to 0 lattes a week, because that's just cruel, but I would say maybe cut down to 2 or 3 slowly, incrementally. So think of you're changing your spending habits kind of as lifestyle changes. Don't think of it as a cabbage soup diet where you have to spend no money. Think of it as small lifestyle changes. Just like if you're trying to eat more vegetables, you're not going to go from having steak every night to being vegan, right? So I think that's that's something that is a takeaway for a lot of people. In terms of recommending how much to set up for an emergency fund, I think it really depends. Some people say 3 months salary or 3 months expenses. Some people say 6 months. If you hear 6 months, expenses, and you're like, oh my God, there's no way I could ever save that much, start small. Maybe it's switching from Starbucks coffee to Stewart's coffee, or I like coffee, sorry. Maybe it is reevaluating what cuts of meat you're buying at the store, or looking at different social triggers. If your whole office always orders lunch 3 days a week, maybe you pick 1 day a week that you order lunch with your office, and the other 2 days you continue to bring lunch. So I think any type of situation where you are, just being mindful of your spending, I think that's really important. And evaluating, like, do I really need all those channels on my cable? If I cut down to a smaller Optimum package, or maybe I cut the cord with Optimum altogether, if I could put that additional money aside, so it's really what works best for you. And I would encourage everybody, if they don't already, whether you bank with Ulster Savings or not, reach out to your banker. And you can put different processes in place to get yourself feeling more comfortable with your finances, and taking some of your spending habits and turning them into saving habits. So before we get into the next portion, does anybody have any additional questions?
There's just a couple of questions for families that are currently non-banked, how they could start to navigate that.
Absolutely. So there are always, so in the state of New York, every financial institution is required, and I'm paraphrasing, I'm not an attorney, they're required to offer at least one checking account that's considered a basic checking account. And we've all probably gotten burned at one point or another by bank fees. I think it's really great how Ulster Savings does our bank fees because we're super reasonable. And they're very upfront about it. I've encountered other financial institutions that feels like the fees are a little bit more aggressive. The tricky thing is, there are certain documents that you would need to go into a bank to have a banking account. There are also some non-bank financial institutions that offer, a prepaid debit card that's embossed with your name on it so that you can use it anywhere and it doesn't look like one of those gift card debit cards. But having a primary identification, whether it's a passport, driver's license, a non-driver ID, I think, establishing that first set of identification is, and then a secondary form of ID. So those would be kind of the two things that one would need for a bank account. If you are not a citizen, you would need to fill out an ITIN form, I believe it is. Brad could speak to that more specifically at the end if we have time. And in terms of spending, I also think about usage. So if there's, let's say there's a really fancy Dyson vacuum I want that's $800. First of all, that would not be something I'd probably spend $800 on, but I would also ask myself, how many times am I going to use it? So whether it's a Dyson vacuum or maybe a really nice handbag or a really nice pair of sneakers that you want to treat yourself with, then you can ask yourself, how many times am I going to wear this? So if it's a $1,000 vacuum and I'm going to use it 1,000 times, then that's $1 per use, right? So I kind of look at things as a cost per use, cost per wear, as opposed to the price. And then if you're purchasing something on credit, whether it's through a credit card, store card, etc., you also want to factor in any interest and fees that you're paying. So, so in terms of Credit Karma versus Chase for your credit score questions, I think it's tricky because there's 3 credit bureaus, and it would depend on which credit bureaus that Credit Karma and Chase are using. If they're very different, like if one tells you you have a 720 and the other one's a 610, I would definitely want to investigate those discrepancies to see if there's something there that's maybe incorrect. Typically, when we pull a credit bureau report and all 3 bureaus are listed, the scores are typically quite similar within maybe 10 to 20 points. And an indication of, potential identity theft or issues like that, you definitely want to get something into more details. All right, I think I answered all the questions. Waiting through the chat one more time. Sharon, I know I didn't quite address your question super specifically with the emergency fund question, but kind of just going back to a few other things that we said, I think it's important to look at your basic necessities, or if you're in a dual income household and one income changes, or in a single income household and that income changes, how would you be able to pay, your bills for 3 to 6 months? And I think, that's kind of intimidating for some. I would say, I'm pretty much an open book, and I will admit that I do not have 6 months saved in savings account. However, I do systematically through my direct deposit set money aside every month, and then as I continue to build that up, and if I do need to tap into it, I can. Credit Karma, I'm not directly familiar with, but I would say that if you want to send me an email offline, we could talk about it more specifically. You guys will have our contact information. just in the interest of time, if we have any super specific questions, I'm happy to, talk one-on-one later today or later in the week, okay? And yes, Christmas gifts. Ulster Savings still offers a Christmas Club account. So you can put a little bit of money away each month and set it aside. It's hard because as, I love giving gifts and I love to go crazy, but it's also important to, set good, healthy financial boundaries. So with that being said, I'm going to turn it over to Bradley, who's going to talk money with you.
Thank you, Abby. So talking about money. According to a 2014 study, almost half of all Americans, about 44%, say money is the most difficult thing to talk about. More difficult even than death, politics, religion. And although money concerns may put a strain on relationships and conversations about money can be stressful, having family conversations proactively will help in managing your finances. Before getting into specific financial topics and strategies to bring up in family conversations, it's important to reflect on your own feelings about discussing money. We were all raised differently, have different feelings towards money. So understanding your own attitudes can be a major help in empathizing with family members who may feel differently than you do. Even if one person takes the lead on day-to-day money management, it's important for both of you to be aware of key financial information in the cases of injury or emergency, illness. You have to be able to find objective, tangible things like accounts and documents to be able to guide your conversation about money with your loved ones. And the following questions can be good conversation starters. Do you have a list of all accounts, investments, and debts? Is there a list of all accounts, investments, and debts? In the case of an emergency, having all of this information in one place could save a lot of time and potentially could save you from some legal issues. Determine whether you and your partner or your family at large will allow each other to access those legal documents. And if so, what the necessary steps are to gain access to them. You also want to be able to know where all these records are kept. So that when your family's having an issue, you're going to be able to find where the documents are, handle any unanticipated issues without worrying about, are they in the basement? Are they in the safe deposit box? These documents may include wills, health insurance information, emergency savings documents, powers of attorney. Many people do keep these records in safe deposit boxes, but that's not always necessary. I know people in my family just kind of keep a binder with all of the stuff safe, but it is important to keep two sets of them sort of at all times, because if you lose one in a fire or burglary, then you don't want to have one copy of them still safe to access. Some of our branches do have safe deposit boxes also. You want to make sure, do you and your family all have access to any online accounts? So sharing those username and passwords for the critical people. Just make sure that they can get in there in case you were to be incapacitated in some manner. I've found that password managers are incredible tools, both in terms of keeping track of your passwords and also helping you create passwords that are secure. You shouldn't always use just your pet's name or your middle name or something for your passwords. It's best to use a combination of letters and numbers, symbols. That's sort of random. And password managers can help you do that with ease. You also want to stay on top of, even if you're not the one who's dealing with money management every day, you want to be in touch with your family member that does keep track of paying the bills and how the expenses are tracked. So having conversations regularly with your family members about how the family finances are going, which bills need to be paid and when, that should also be a priority. You'd also want to, in addition to those powers of attorney and wills and things, you'd also want to have a special place to keep your birth certificates, marriage licenses, and passports, because those may be necessary in terms of finding, opening, accessing critical accounts. So finally, the last question that we will deal with here is, what kinds of arrangements are planned in case of an illness or injury? And what about arrangements that are made in the case of death? In cases when a loved one or family member falls ill, a power of attorney is often set up with someone you trust. A power of attorney enables another person to make financial or healthcare decisions on your behalf. Make sure you know whether these plans are in place in the event of an illness, injury, or incapacity. And as one's health needs become more complicated, it's also a good idea for these needs to be documented in a clear place, like that binder I was mentioning earlier, and discussed in advance, so we know that everyone's health concerns can be managed in the future. As people start to approach old age, and even before that, if you'd like to be prepared, it's important to prepare for the unexpected and to make and share plans for your estate. Some people will choose to create a will or a family trust to identify which money should go where, to whom it should go, and who will handle the disbursement of all of your inheritance. Knowing your family's end of life arrangements may be sobering, but it is necessary to discuss it. Make sure you know your family members' wishes, information about life insurance and wills, as well as who may be the beneficiaries of that estate. So that's sort of focused around the conversations that you may have had with your elders and with your counterparts in life in the family. But it's also important to have these sorts of financial discussions with children in your life. Trying to figure out which financial habits to focus on with children in your life may be sort of overwhelming for a lot of people. One way to think about such a big topic is by breaking them down into 4 main categories. I'd like to talk about earning, borrowing, spending, and saving, and financial decision making. Earning, understanding how money is earned in a household is key to many family conversations. Borrowing, well, of course, we all like to stay out of debt. It's often something that we have to do to live our lives. Whether it's borrowing monies from your parents for a small purchase as a child or applying for a car loan for the first time. Understanding borrowing is an important contributor to financial health. Spending and saving, one of the keys to financial health is understanding the concept of putting aside the income needed to make purchases related to both needs and wants. Talking about both spending and saving as one topic can be helpful so that family members understand that in order to spend, you need to save. And finally, financial decision making. In addition to talking to your family about big financial decisions, such as making a large purchase or contributing to a retirement account, This financial decision-making is a skill that can be developed through modeling of positive financial behavior and making small changes one at a time. As a member of any family, doing your part to make responsible choices can have a profound impact on yourself and for others. Especially when we're talking about finances for children, it's important to sort of adjust these conversations around their ages. So when they're really young, you'd want to explain, for instance, around earning, you want to explain how and when they can earn money, maybe through allowances or from gifts. For those kids that are a little older, maybe for borrowing, you'd identify situations when people pay for certain items in small amounts over time, instead of summarize the benefits and disadvantages of using credit. And for age 13 to 21, we'd want to focus more on maybe spending and saving, explaining concepts such as investing, compound interest, and inflation. Create a plan to prioritize expenses, manage spending, and meeting goals. And maybe you'd also want to discuss financial decision-making, discuss how individual responsibility for financial well-being will change as life circumstances change, as I mentioned in our 10 rules of personal finance. So in summary, money matters can be sensitive, so speak frankly about money and consider the emotional connection and symbolic value that children form with money when you discuss financial issues. Age matters, so you want to pay attention to making sure the words that you're using are appropriate for the age that your children are. And just, of course, practicing all of these things on a daily basis. So whenever you see an opportunity to have a conversation about money, have it, and then it doesn't become such a barrier. That's pretty much it for this segment. Anybody have questions?
So it looks like we have a couple questions. Monica, I just want to address your question about bank statements and kind of physical security. We are going to talk about that a little bit in the next segment. But in terms of document retention, safekeeping, things of that nature, what typically happens is if you sign up for online banking statements, they don't actually email you the statement. They usually email you an alert saying it's available online, and then you sign in securely to your online banking platform, which saves them. It's very secure. And typically for record retention, they go back several years. So that's definitely a safe place to keep them digitally. If you do have them saved on your computer, make sure your computer is password protected. And in terms of, other online documents, I think it's definitely important to keep 2 copies. In terms of really important paperwork, a safe deposit box, regardless of where the safe deposit box is housed, they're fireproof and insured. So if you are not using a safe deposit box and you are using a home safe or a home physical location, make sure that it's fireproof. Because if those documents are burned, and it could be very difficult to replace them. And make sure that if you do have a safe deposit box, you do let your family know its location. So I think those are kind of some good tips. In terms of paying bills via direct debit, I have mixed feelings about that. I consider myself to be quite tech savvy. However, certain bills that are more unpredictable than others, for example, my Central Hudson bill, which could be $20 one month and $100 the next, I personally don't do direct debit with that because it varies so much. But when, like, referring to my Verizon bill, it comes out automatically every month. It is a surprise to me for some reason, but whether you choose to go online directly to pay the bill, or if you choose to do it from your own online banking, I think that's kind of a personal preference. and we could always, chat offline if you had more specific questions. Any other questions on how to have better conversations about money? All right, United Way, if it's okay with you, we'll move on. All right, hearing no objections, we are going to touch upon banking in a COVID-19 world. And, these are good tips. And I think that, certain things are going to be more specific to the pandemic. And we're just going to kind of really briefly go over them. And at the end of the PowerPoint, we also have some website links for resources that you can look into these things more in detail. Just in the interest of time, we want to make sure that you have a good understanding in a general sense, and then specific questions. I'm more than happy to stay on the Zoom call if people have more specific questions later. So in good times, there are scammers and criminals trying to get your money and your information. And in bad times, that is amplified probably tenfold. Unfortunately, people are in tough situations financially with the pandemic, and desperate people don't always make good decisions. So it's really important that if you are either trying to donate funds to support relief efforts, or if you are looking to get funds for relief, make sure you do your homework. And I think that's really the common theme that you're going to see through the next couple slides. Use good judgment. And if you're not sure, ask. If you're unsure if something's legitimate, ask questions. And I think that is really the best advice. Unfortunately, with everything going on with COVID-19, there are scammers who are calling people and saying, we have information, I'm a healthcare provider. I have information that someone you came in contact with has tested positive for COVID-19. You have to pay us $500 right now so we can test you. That kind of is almost like a hostage situation where they're taking you hostage over the phone. There's a lot of scams right now where people are wanting to set up GoFundMe accounts for various charitable things. And it's really important to ensure that your donations do reach the actual people in need. So that's why it's really important, if you are feeling philanthropic, that you make donations to well-established charities and do your research first. United Way is a great organization, just saying. Unfortunately, people are preying on desperate people, and there are fake stimulus offers out there. So again, I don't want to sound like a broken record, and I don't want anybody's eyes glazing over, because I know we're in the last third of the presentation, but just use good judgment. And if it looks too good to be true, it probably is. So if you are trying to buy a Nintendo Switch, I guess, with every kid being home, people are really trying to buy a Nintendo Switch. And if they're sold out everywhere and you see one online for $100 under the retail value, in stock, mind you, that should definitely be a red flag. This is just kind of a brief overview of safeguarding your information. This is good information whether there's a pandemic going on or not. Brad did kind of touch on a few things in terms of password information, making sure things are backed up, locked, all that good stuff. And then we're just going to show you a quick example of a fraudulent email. So I'm just going to let Brad talk about this for a second.
Yeah, sure. So as you can see, just going from the top of the image, the description of the sender says Apple ID, but if you actually look at the web address there, the email address, it's got nothing to do with Apple, or anything to do with any kind of Apple products. It's got misspellings in it. It's something you probably never heard of. In a lot of these fraudulent emails, they'll also come with attachments. Never want to open an email with an attachment to an email that you're not expecting. If you're not expecting an email then you always want to be cautious about which links you're clicking in it and which attachments you might open on them. You're also looking out for bad grammar, incorrect spelling, and then, regards Apple, that's just not the way people write in emails typically, if they're real people. So, you just have to sort of be able to read the email, catch those clues, and be able to distinguish when an email is not authentic.
Another,
Of course, go ahead.
sorry, I was gonna say, another topic with people limiting contact, and it's not just people who have, weakened immune systems or the older population. I find myself, trying to limit physical contact with people, especially people I don't know. And I think it's important, regardless of where you bank or how you access your money, to know that there are many different services out there each financial institution offers. So, you might have typically gone into the bank in person to transact, cash your paycheck, make a deposit, etc. But pretty much every bank has, multiple ways to access the bank in a COVID-friendly manner. So, of course, there's telephone banking. You can call your branch, online mobile app, utilize a drive-up lane, and a lot of institutions, ours included, is offering pre-scheduled in-person appointments. So if you have a more complex matter, a new account, or an extensive thing that you want to make sure that you can be accommodated for, opening a safe deposit box, I would suggest calling the bank ahead of time and asking if they're taking appointments, and that way they can limit the amount of people that are in the bank at once and maintain your social distance. And I think it's important, regardless of what financial institution or place that you utilize to pay your bills and things of that nature, feel comfortable asking. If you have questions, if you're looking for a new bank, you have every right to ask the person who's helping you to say, what has your company done to protect its employees as well as its customers from getting sick? A lot of the different bigger banks have kind of these coronavirus response teams, if you will. And, I'm personally proud of how we've been handling the pandemic, and we have, 6 feet apart things and partitions and a lot of hand sanitizer and Clorox wipes. And I think for me as a consumer, I breathe a little easier knowing that a lot of these businesses are working really hard to make sure that we stay healthy. So that's just kind of a little anecdote, if you will. Looks like we have a couple questions. Yes, so there was an IRS scam going around, and I feel like that there's an IRS scam going around all the time. If anybody ever calls you from a pre-recorded number, or the robot voice, and says that you're compromised, whether it's the IRS, the DMV, or any other alphabet agency, or even if a human calls you, say, okay, I'd like to look into this further, give me your name and number that I can call you back at. And if it's a scam, 9 times out of 10, they'll hang up. And I often will Google the phone number. If it's, a weird number, if somebody's calling me from Texas and I don't know anybody from Texas. So those are different tools that you could utilize. Nikita, yes, so we have financial literacy programs for families. As a give back to our community, we participate with a program through EverFi, which has age-appropriate modules. So we have a Smart Start checking, where individuals 13 to 17 have access to a debit card. And if they complete 10 online modules, they get a $25 gift. So that's really great. A lot of other financial institutions do offer things. I know the credit union has different seminars. And with ours, you don't have to be a customer to use them. We have a financial education section on our website, and you create a username and password and it tracks your progress. Let's say you want to have a conversation with your 7 or 8 year olds. I know when my nephews were little and my sister would go to work, they knew that their mother was without them for a really long time as toddlers. And, you know, by the time they are, 5, 6, 7, they understood the concept of going to work to earn money to buy things and have a house and all that kind of stuff. So there's great tools and tips out there on how to talk more specifically, how to set up a family plan. Credit Karma is, I had mentioned before when you lost audio that I don't have personal experience with Credit Karma, but it can be fairly accurate. Thank you, Monica. And Brad and I are available. We both live and work in our community. And in case you didn't notice, I like to talk. And I'm happy to answer any questions. So we're just going to take a final Q&A for any of the things that we've gone over. And we'll make sure that we get your email addresses from United Way so we can send out the presentation. And if you guys have any, situational specific questions you want to talk about one-on-one, I put my email address in the chat box, or if anybody wants to call and speak to one of us, we're happy to do that. Brad has the best email address ever. These are just some resources. So EverFi information is available. The United Way's COVID-19 resources. That page is ever changing, and they're doing a great job keeping that page up to date. So if you do have, ways that you want to help, and I am a strong proponent of the United Way phone number, 211. So if you call 211 from a Hudson Valley phone number and tell them you are A, looking for resources, or B, have resources you want to provide, whether it's you want to volunteer or you need help to care for a loved one, you can call 211 and they will give you options for services. So there's, Jen, to answer your question, it's not a yes or no question. That's a yes or no answer. So the question is it true that anytime someone checks your credit goes down? So sometimes when a credit inquiry happens, it can affect your score 1 to 2 points. One of the things that you want to be careful of is, let's say you're going to purchase a car and you're at the dealership and they say, oh, we have 20 different lenders. It's not a good practice for them to check your score and your offer with all 20 lenders. So if you have a general idea of what your score is, and if if they say, oh, this is our lender for top tier credit, and you don't have top tier credit, you would say, what's the mid range? Because it's always ideal to have fewer people looking at your credit, but a periodic credit inquiry is not going to make or break a credit score. What other questions do you guys have? That is pretty much all that we have available for our PowerPoint slides. I don't know if United Way wants to open it up to physical hand raises or how that works, but I am going to stop sharing my screen so we can make sure that we get everybody's questions answered.
Thanks, Abby. We just had one about Experian or Boost, if that's valuable.
Sure. That's not something that I've personally worked with. I do know there are multiple services out there that claim to help improve your credit score. And I think the most important thing that you can take from that is utilizing reputable sources. It's no different than when we were talking before about if it's too good to be true, it probably is kind of thing. One of the things that you can do is you can check your credit report for accuracy. So I remember a couple of years ago that my mother had applied for like a store card at Macy's and was declined, and she was like completely shocked. And my mother, like, she still writes checks, and she might be on this call right now actually, so she might text me later, but she writes checks and we didn't understand why. And it turned out someone had tried to steal her identity in Colorado, and was opening stuff in her name and some address in Colorado. And, we've never been west of the Mississippi River. So, yeah, so that, that was a red flag for her to realize that something wasn't quite right. So, staying vigilant. Different institutions say what top tier credit is, fair, poor, etc. Basically, it varies. If your credit score is typically, if it's above 800, it's like super excellent, amazing. I would say that, and this is just anecdotally, I know every financial institution is different. I'm just kind of giving you an idea. I would say, like 700 to 780 is like really good. And then, I think it's definitely good to kind of have a good idea of your credit score. Like personally, I have a Discover card and I have a Barclay credit card. So both of them offer a free credit snapshot. So it's not an actual hard hit every month, but it gives me a range that my credit score is in. And they both are very similar. And to me, a red flag would be if one of them said my credit score was 750 and one said it was 550, then I would be like, oh no, something's wrong. So going back to what I had said before, most of the credit scores should be within like maybe 15 to 20 points within each other.
Any other questions for Abby and Brad?
I just wanted to address one more thing that I see in the chat. Yep, so if you are looking to purchase a car or a home and you have multiple people looking at your credit, it's not always considered a red flag. If you have, 30 financial institutions checking your credit within 2 days, that's kind of more of a red flag that is viewed. But it's one of those things, like, does it make sense, right? What does lack of sufficient relevant account information mean? Alexandra, I'm not sure in what context you're asking. So it says, what does lack of sufficient relevant account information mean? If you're talking about that being on your credit report, yes, okay. Sometimes it means that there's not enough information available that the financial institution has provided the credit bureau. So it doesn't always mean something bad or good. It just means that you may not have had the account long enough for them to say whether you're always paying on time if it's a new account. You're welcome. So Shirley's question is, where's a good place to check your credit? You want to really be careful with any third party. And I realize we're a few minutes past 11, so if anyone has to hop off, I will not take it personally. If I should take it personally, send me an email, we can talk. But I would be really cautious about any third-party credit companies. So Credit Sesame, Credit Karma. There's one that used to have a really catchy jingle I haven't seen on TV in a while with the kind of a Where's Waldo looking guy. Freecreditreport.com, I think it is. So the official one is annualcreditreport.com. And that is the official one, and you can pick which credit report you get. So there's 3 credit monitoring bureaus: Experian, Equifax, and TransUnion. So what you would do is you can pick up to all 3, or as Brad suggested, you could stagger them throughout the year and get your credit report. Now keep in mind, your credit report and your credit score are 2 different things. So your credit report is going to show a list of every account you've ever had with any credit. So whether it's your Macy's card, your Kohl's card, your car loan, your hot mortgage, your line of credit, your any credit account. And it's going to show your highest balance. It's going to show your current balance, how many times you've paid late within the last 30, 60, and 90 days. So the longer you go without making a payment, the more negative of an impact it has. So I would go first, if I was starting, I would go to annualcreditreport.com. And I think it's $8 you get your free report, but to get your score, I think it's $8 to $10. And you can check your credit scores there. So there's 3 different credit reporting companies, and I'm not an expert on this, so I don't want to talk out of turn. But different financial institutions work with different credit bureaus. So there's not one like universal thing. So there's 3 credit reporting agencies that kind of work in tandem with each other. And I don't know if anyone was a victim of maybe 2-3 years ago of the Equifax data breach, but thankfully, I mean, I was, unfortunately. I see a few people nodding. Thankfully, it's kind of good that there's 3 bureaus, because if all 3 bureaus got hacked at the same time, which I think would be statistically improbable, we would be in really big trouble. So thankfully there are 3 different bureaus, and unfortunately one got hacked, but fortunately only one got hacked. So not every bureau talks to every financial institution. And I'm assuming that's something that has to do with our capitalistic society, but I don't know the answer for that specifically. I wouldn't say that there's one that's better or more reputable of the 3. I would say that in my personal experience, when I've checked, everything's been pretty similar. And again, if one is way different than the other 2, I would definitely, consider that to be a red flag. Monica's question is, what do I think about credit bureaus having access to people's bank accounts in return for a higher credit score? Now, this is just my own personal view. This isn't the view of the bank or United Way or anything like that. I think that's creepy and scary. For me, it's kind of a separation of church and state. So we have checking accounts, which are spending accounts, and savings accounts on one side, which are non-credit products. And then on the other side, we have credit accounts. And in my opinion, I like to kind of keep them separate. And I don't know how much TransUnion sharing. So personally, I think it's kind of strange. I haven't looked into it in depth enough to make a really informed decision, but it doesn't sound quite right to me. But that's just me. You're welcome, Shirley. All right, we probably have time for one more question. All right, nothing else is coming up on the chat box.
All right. Well, thank you so much to Abby and Brad for a fantastic presentation.
Thanks for having us.
And I know they mentioned they'll be sending out some information. I'm going to also be sending out a survey from United Way, so please take it. And I'm going to turn it over to Yaya to give some closing remarks.
Thank you, Melissa. Yes, I would like to thank Abby, Paul, and Brad Umble from Ulster Savings Bank presenting that wonderful presentation. Amazing job, guys. I hope everyone learned a lot today and will make better financial decisions. Fairly quickly, upcoming events and workshops. Monday, 8/24, we have the Esprit Task Force. 9/11, Day of Service, and 9/20, the Community Breakfast. Today's presentation slides will be sent to everyone's email address, by the way. And thank you, all of you, for participating in today's workshop, and enjoy the rest of your day.
Send me info on Day of Service. I haven't signed up yet.
Oh, definitely. And you guys were amazing. I learned a lot.
Thanks for having us. And I know we kind of had a diverse group of participants. So if there's anything that anybody has questions about that's more specific, or they want more in-depth information, we have tons and tons of resources available to us that we are more than happy to share with you. And, I could talk your ear off on any of them, so.
Okay.
Awesome. Thank you guys so much for your attention and your great questions. On behalf of myself, I hope you guys had a really informative time and are able to take a few things away and implement them in your financial household. Go be captains of your financial ships, man.
Thanks so
Definitely.
much.
Thank you.
We'll see you at the community breakfast on September 30th.
Sounds good. Bye-bye.
Bye.